Hello, I'm Michael Glass from michaelglass.com, where we focus on making informed decisions about our financial future. Before we begin our video, you want to start off with our disclosures. Any symbols you see today should not be inferred as a trading recommendation. No matter what form of investing you choose, stock, forex, futures, options, they all have a level of risk associated with them. Any strategies we show today are for informational purposes only. Future results are not guaranteed. And finally, any investment decision you make is solely your own responsibility. Trade at your own risk. So this is our stock market technical analysis trading plan. In our video, we'll look at the past week's economic calendar and also look forward to next week. We'll see what happened as far as the most recent price action to identify key support and resistance price levels. We're going to look at the charts of the market leaders, Apple, Google, Goldman-Sachs, Priceline. We'll take a look at those. We'll look at the dollar, gold, and crude oil charts to see if there's any leading sentiment. And finally, we'll have an education spotlight at the end. Here we are looking at our three major indexes, the Dow Jones, the NASDAQ, and the S&P 500. And we can see just fractionally that either rose or fell just a little bit. We're still up very, very nicely for the year. The first 2 months, January and February, have been really good for the market. But we can see that for the past 2 weeks here in February and as we start March, the market has kind of paused. The market is trying to gather itself for what the next move. You could say the market is fatigued. We've talked about that the market is at 25-30% from those October lows. So certainly the market has shown strength, and there is reason for the market to pause. And so the question always is, for me, is what's the catalyst? What's going to be our next move? And we know when we look at our economic calendar that we do have a couple of catalysts coming up next week. So again, we can see that the Dow Jones and S&P 500 have reached the highest level since 2008. The Dow Jones printing above 13,000. Because it is just, even though it's slightly, it is a gain, and so that's 8 of the last 9 weeks for gains for the S&P 500. But more importantly, as I filled up my gas yesterday at a 375, oil hit multi-months above, that should be $110 per barrel, and the dollar during the week hit a 3-month low, although it closed for a weekly gain of just under 1%. Overseas, we have the G20 talking about what they want the Eurozone to do in order to get some more money, some more financial safeguards. We know that Greece finally went through its bailout, got its approval for this second round of bailouts, and they are asking their private investors to now agree with the swap. And again, what's important about that swap is that at least 75% of the private investors had to agree to do the swap or the deal's off. Corporate. And, you know, to me, if you want to know what's really been driving this market, and I know I'm biased, I'm a Mac guy, so, you know, but if you look at the real catalyst of this past January, February, I really think it's about this iPad 3. This week, Apple finally sent out its invitations for its media event that you really want to see and touch. That's going to be this upcoming Wednesday. Most believe it's going to be about the introduction of the iPad 3, rumors about Apple TV. Yes, I have a couple of those. Then, you know, there's all these other wild things. Will there be a smaller iPad and all these other things? You know, whatever. Here's the thing that I think that's important, and not just because I'm a Mac fan that I'm mentioning this, is the old mantra of sell the news. Once this finally is out there, and it, you know, all the rumors of what it will include, and you know, whether Apple can knock it out of the park as usual, that'll be interesting to see. But the important thing is, once it's there, you know, Apple hit 545. You know, so you really may see some sell news, and you have to be careful. And that sell news may bring the market down with it. On the economic front, we saw that the fourth quarter GDP was revised up from 2.8% to 3%. So, again, what's going to keep us moving higher as we reach these 2008 levels? What can get us keeping going? We really don't have anything on the earnings front that really is going to move us one way or the other. We have to get to April before our new rounds of earnings have to begin. So March should be interesting. But what we do have is our jobs number this week. Wednesday ADP. Will that be a predictor of Friday's employment situation? On Thursday, we have a lot of data coming across the seas, and the Bank of England and each European Central Bank announcement. And then we also have the Bank of Canada. So we have some economic data coming out this week that can possibly move the market, and we need to be prepared to take advantage of the move, whichever way it decides to go. So let's start off by looking at the dollar. We talked about the 3-month low here this week, but you can see that really matched up with some of the wicks here from December, even going back to September. So the buyers found value right here at 78 and really were able to push it in and bring it back up into this 79, 80 range. Notice though, of course, we are making lower highs, so we really need to get above 80 to break this downtrend that the dollar has been in. But certainly sideways to down for the dollar. Now we had a strong end of the week for the dollar, and what does that mean for gold? Well, gold had a very weak end of the week, almost a falling 3 pattern. And what's interesting about this big candle is that we found support here around the 1725 price level, and we broke right through it. And as we came back up to test it, we found weakness. So sellers may be finding value at the 1725, trying to push it back down to the 200 moving average. Finally, what's really affecting us all, crude oil. There it is at the swing high of 110. We are watching the 114 price level. That's what we were watching. So it's going to be interesting to see if this 110 holds up. Little sideways price action. If the dollar strengthens, we may see some weakness here in crude oil. We are taking a look here at the S&P 500, the daily chart. I'm going to zoom in here for you. And we can really start to see this consolidation over the past 2 weeks that I was referring to. Market's really sitting here at this 1370. Now, we did get above this 1370, high of 1378, as you can see, but we're really just kind of hanging out here. And not really, you can see the candles shrinking a little bit. And when you look at how this started and look at the big candles and nice volatility moving up, 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 up. And then as we start reaching the end of February here, you can see how the candles really started to shrink out here. And that's showing a little, a little fatigue. And we can see, as we say, just because the market is overbought doesn't mean that it can't stay overbought. So here we are overbought since, February 10th, and we have stayed in that status for 2 weeks. Same thing here on RSI and MACD on the daily chart. So we're overbought, showing some fatigue, candles getting smaller. We'll zoom out to the weekly and zoom in to the weekly. And we really can see the overbought status on our indicators here. But we also can see we have back-to-back sort of doji candles here. So again, the market is starting to pause here. Doesn't necessarily mean we're going to be a reversal, but we definitely need a catalyst to go one way or the other. We will zoom out just a little bit more to the monthly to get the biggest picture that we can get. Zoom in, and we can see even here, even though we got a little up candle here, we really are hitting the overbought status on the indicators. And we have a nice doji going in here for the month of March so far. So looking good. Pause, fatigue. We need a catalyst. We got some economic data that could be a catalyst for the S&P 500. Let's go on back. And remember, I believe Apple has been a great driver for the market in 2012. And we can see that in the NASDAQ here. Zoom on in for you. Well above those 2008 highs there, and pausing here right at 3,000. And we really have had smaller candles here on the NASDAQ for even a little bit longer than the S&P 500. But we can really see this 3,000 hanging out here, and it's going to be interesting to see. Definitely overbought here on multiple levels. And we are going to move on out to the weekly. Sorry for the sneeze. And on the weekly, we can really see how beautiful that looks on a chart. And we can also see, again, the pause in the market. One more time to the monthly. And we can see that breakout right here. and really begin to see the March move as, again, the market is fatiguing just a little bit. So what we're going to look for here in the next week, catalysts. How is the market going to react to the jobs number? How is the market going to read to the financial numbers from the Bank of England and the ECB? Here we are looking at the daily chart on Apple, and you can really zoom in here and start to see why I say Apple is the market right now. There's the October lows, and look at the Apple chart, really driving higher, especially since these record earnings. And I couldn't push higher, 548 the high, closing at 548. But again, as I said earlier, you really got to watch the sell the news. March 7th, iPad potential event. Got to watch the sell the news. Look at this market profile. Once we get below 540-ish, all the way down to 515, there definitely seems to be lighter volume there. Point of control at 544. Definitely to watch the sell the news there. Now, Amazon has been weak, opposite of the market. Zoom in a little bit more, and you can see it's definitely starting to put in some lower highs here in that larger term downtrend, but we're really holding on to this 180 price level in the 500 support. Look at the market profile, really sitting in here between 183 and 179. A lot of volume in between that $4 price range. So sideways to down on Amazon, Apple bullish. Google did make its way back up to the 620. We were talking about this channel and popped its head just above that channel, and that really does look very similar to what the market is doing, right above its high, consolidating a little bit. You can see a little volume accumulating here at the 620, 622 price level. So I'm going to say sideways on Google. Now here's one that's interesting. Goldman Sachs. Look at Goldman Sachs. As the market has consolidated, which it has also, but then it popped out here on Thursday. And so that certainly is good. However, with that pop, you can see that there is a little vacuum here. If you get below 120, there certainly is some room to fall down to 116. And there's our resistance at the 118 price level. So, you gotta say sideways up there on Goldman Sachs out of that big longer term downtrend. IBM popped its head also last week, made a little move, and now it's consolidating like the market. So we got out of this range here, got above 195, and for the past 2 weeks, now this definitely looks like the market. And look at the point of control here. If we get below 197, 196-ish, definitely a fall down to 193. And Intel. Intel kind of looks like IBM. Zoom in here. Look at the volume accumulation. Really zoom in here, and you can see just how long the market stayed in between 26, 25, and 27. So really in a 75 cents range. So it's really going to be interesting to see if this can finally get moving. But we popped up, came right back, and we're really hovering around 27. MasterCard had a pop out last week. Zoom in. But it's fallen back with the market a little bit here the last couple of days. So it's going to be interesting to see what happens here. Look at this 400 price range. Definitely, we see a little pocket of volume here, a little pocket of volume here. Sideways up on MasterCard. Netflix. Netflix is still in this range of 74-ish up to, 92 up to about 126. It's fallen back off of this resistance price level, finding a little support in the 50 moving average. See the point of control here at 112. A lot of volume accumulating in this 108 to 114 price level. Sideways. And finally, Priceline had a little pop off of earnings. Nice little pop in here. Had the earnings run up. Now he popped up. You can see the volume gap in here. Priceline definitely up. As we come to our education spotlight, we are continuing to surmise what we've been talking about in terms of trading plans. And we started off by talking about, who will you be as a trader? What are your goals? What are your objectives? And how do you plan to reach those objectives? Last week we talked about the strategy, the rules. And now this week we're talking about monitoring. We're trading now. How are we going to monitor our performance? Because again, we're talking about being consistent, high probability trading. So therefore, as a part of my trading plan, we know we have to actually be looking for those trading setups. And then once we find those high probability trading setups, we have to track them. We have to document. Remember, we have to learn from our mistakes. We have to adjust when the market says, I'm now doing this. And then we have to monitor our performance to make sure we're not drawing down, making sure that even if we have positive expectancy, that we know that over time, 7 out of 10 trades, 6 out of 10 trades, some trading plans, 5 out of 10 trades is enough to be profitable. You have to make sure that those 3, 4, 5 losses don't wipe out all of your profits. So, you have to monitor your performance. You have to watch your money to make sure that although the strategy is working, is it still producing a profit for me at the end of the day? Commissions, assets, liabilities. I put up a post yesterday on my blog because I was approached by a person about if where should they start, and I had to say if I was starting all over again, and we were all newbies at one try, new traders, I would treat it like a business. I didn't treat it like a business when I started. I treated it like a hobby. I was a teacher at the time. And that was during the pump and dump penny stock days. And somehow I got in a trading room and, we were pumping and dumping. And even when I got into options more serious, I still didn't have a training plan. I was still just following what somebody else said to do. So if I were to start over again, I would treat it like a business, assets and liabilities. You have to know what's coming in and you have to know what's going out. You have to look at your performance and you have to manage your money. That's how successful traders win day after day after day, month and year after year. Please continue to like, comment, subscribe, give us some feedback, let us know what you want to see so that we can continue to provide value for you. You know about our resources. They continue to be available. Again, we're really highlighting our managed forex accounts. If you want to take advantage of our expertise, we can help devise a plan. Again, we're all about being financially literate so that you can make your own decisions and you can make your own decision to put us to work for you. Because it doesn't make a difference about the system or the indicator. It's about your ability to pull the trigger. It's about your ability to recognize your performance to pull your trigger and know that you have positive expectancy and that over time this is going to work. Some people can do it, some people can't. Some people treat it like a business, some people don't. And the results typically show which category you fall in. Thanks guys, and I'll see you next time.